Good morning, everybody. This is our third, I think, APSCo Question Time Live. We're doing them on Tuesdays and Fridays, pretty obviously with a bank holiday on Friday, Good Friday next week. We won't be doing the Friday version. But what we've been trying to do is get a group of experts and practitioners to answer questions of the audience. And those questions are coming in a range of things, but I think you will find that you get really good detailed answers to the things that you need to know. This morning's group I have is Tania Bowers, who is legal counsel at APSCo. I have James Wakefield, who is the CEO of Cobalt Recruitment, an APSCo member that have a couple of hundred staff actually spread over 11 offices globally, and therefore has a lot of experience within the recruitment market and managing a business through such difficult times. And we will have, but he's on a call at the minute that he was taken away for, but is promised that we'll be back and in this group, even though I suppose that coming from the banking sector, Steve Solomon, who's Director of Professional Services for London and the commercial part of NatWest, has the potential to be stoned alive. APSCo have written to the government and to the British Business Bank to make some demands with regard to access to business interruption loan scheme. It's been one of the forefront of problems that our members and the rest of the recruitment market have had, and therefore we put forward a pretty strong letter actually to be asking for some changes to be made from the government to communicate with the banking sector. There seemed to be a disconnect with what the government was saying was available and the banks that have given a task to administer the scenario and open up access to funds to businesses. Tania, in Steve's current absence, can I come to you and ask you if you can give us an overview of what the scheme was looking like up until 10:30 last night, when Rishi Sunak, the Chancellor, gave a bit of an announcement with what should be going on, even though we know the guidance has not come through yet. Tania, over to you.
Hi. Our understanding of the existing scheme, the coronavirus business interruption loan scheme, was that it was only open to those SMEs that were not able to secure regular commercial financing. And this is what led to our members experiencing banks trying to sell them almost any other product they had, rather than allowing them access to the business interruption loan scheme. Also, what became quite apparent was if banks were offering them terms of the business interruption loan scheme, they were very frequently asking for personal guarantees for loans. And effectively, this has meant that the business interruption loan scheme has not had the impact that the Treasury hoped it would have. So with this in mind, last night and published this morning, the Chancellor announced further action to support firms affected by the crisis by bolstering the business interruption loans for small businesses and announcing a new scheme for large companies. So what the Chancellor has said is that £90 million of loans to nearly 1,000 SMEs have been approved under the scheme since it was launched. So there has been some movement, but obviously they want to increase this. So to maximise the support, they're extending the business interruption loan scheme so that all viable small businesses affected by COVID-19, and not just those unable to secure regular commercial financing, will now be eligible for the Corona Business Interruption Loan Scheme. They're also going to stop lenders from requesting personal guarantees for loans under £250,000, and they're making operational changes to speed up the lending approval. For loans over £250,000, personal guarantees will be limited to just 20% of any amount outstanding on the lending after any other recoveries from business assets. Lenders were already prohibited from asking business owners to put their house on the line, but today's changes will provide further reassurance, the Treasury says. There's also a new coronavirus large business interruption loan scheme. It will provide a government guarantee of 80% to enable banks to make loans of up to £25 million to firms with an annual turnover of between 45 million and 500 million. And this will give them more confidence to actually give the loans. So that's the main changes in a nutshell.
Okay, great. Tania, thank you for that. I think what I'm going to do, we've got a lot of questions coming in, but can I say to everybody out there, if you have questions, front load them, because in each of these sessions, we last an hour and we always run out of time at the end to answer every question. So get your questions in. It may well not be anything to do with this new scheme and about access to funds from the banks. And what I'm going to do is take some of the earlier questions that are not to do with the banking sector, so that when we do have Steve in on this panel, that he's got an opportunity to answer those. So bear with me. Let me go through some other questions that have come through. The first one is, read guidance on payments to suppliers for contingent workers impacted by COVID-19. Is this guidance only relevant to the public sector contingent workers? And I know at the moment, yes, it is. Tania, can you give us any more information on that?
The only guidance we're aware of from government is that was issued by the Cabinet Office earlier in the week. Really, the Cabinet Office only have any sort of control, so to speak, over central government functions such as HMRC's use of contingent workers, DWP, BAYS, etc. So this was directed at central government departments, but it was also a recommendation of steps that the wider public sector should be taking, such as local authorities, schools, etc. So that's hence why it is quite confusing, because for the vast majority of the public sector, this is only guidance, and in reality, public sector clients might be thinking twice before committing to continue to pay 80% of fees and plus a margin for the recruiter for contingent workers that they're actually not able to receive any services from. This isn't furlough. This is a more straightforward, the client continues to pay for the contingent workers services 80%.
Okay, you can see why the government have wanted to do that with a view of it's, their money anyway. There's no point putting it in one end and taking it out the other or whatever. And there does seem to be in the education sector, some of the schools or the trusts are not following this guidance at all. So there seems to be confusion across particularly the education sector at the moment, but I'm sure other parts of the public sector. Are you hearing that at the legal helpline, Tania?
Yes, we are. We are, yeah, many clients in the education sector and other sectors just aren't aware of this guidance because it's not being widely broadcast. And if they're not on the frameworks, if they're working to a Crown Commercial Service framework like public sector resourcing or the education framework, then they will have been told about this guidance by Cabinet Office, well, by CCS, but a lot of the public sector, I suspect, just isn't aware of it, and if it is, doesn't really know what to do next, because it is guidance.
Yeah, I wonder, because APSCo have a close relationship through our Compliance Plus education with a number of the school trusts and other users of recruitment companies in the education sector. I wonder if there's an opportunity, I'm putting you on the spot a bit here, I'm putting us on the spot, where there's an opportunity for APSCo to put a communication out to that client base, as much as we have that, to suggest that guidance has been made by way of education?
Yes, that's certainly something we could look at. Yeah, look at the contact details that we do have, and I mean, a lot of it will be publicly available.
Yeah, I'm wondering whether we could do that. It would certainly help those members of APSCo in the education market, that people know. Now, we can't say it's anything but guidance, but if we think there's a lack of understanding or a lack of knowledge about there being any guidance, then that's something maybe we could do to help out. Thank you, Tania. Let me go on to the next question. The government says that no fee can be charged from the grant money received. Has there been any guidance over whether agencies are able to charge clients a payroll fee for providing a furlough service, given the time, the resources and the cash flow consideration? Any guidance on that? Tania, let me come to you again.
There's no guidance on charging fees to a client for operating furlough on an agency worker. No, there isn't. I mean, this point has obviously been raised by us with employment agency standards at BAYS. We have a conversation twice a week with them. The only thing written down is, again, going back to this Cabinet Office document, but remember, that's not about furlough, that's about the public sector continuing to pay for workers. And there is an allowance in that for recruiters to continue to charge 80% of their normal margin or fee. But that's all there is at the moment.
So would you think that APSCo member companies could be looking at talking to their customer base about charging an 80% of their margin, and ask for help from a cash flow point of view, but the 80% of their margin is something where there's a bit of precedent set in one area, that it might be something they could quote?
Yes, I think in reality, the feedback we're getting from members, particularly larger members, who are probably slightly more advanced in thinking about how to furlough agency workers, is it really is a matter of talking to clients, having the discussion, and trying to reach some form of agreement with them. This is a very difficult situation, this whole concept of furloughing agency workers, whether they're on your payroll or on an umbrella payroll, because until the furlough scheme is up and running, there's a really significant cash flow issue for both umbrella companies and for recruiters in how they're going to finance the furlough. So some larger members are talking to their larger clients about whether the clients would effectively advance the payment, but that does bring up some quite complicated contractual and accounting issues about how that would actually work.
Yeah, okay. James, can I come to you? I mean, I know that Cobalt are big players in the real estate kind of construction area of recruitment. That's your marketplace. Do you have PAYE people at the lower end of that marketplace? And are you having discussions with your clients at the minute about this kind of furloughing scenario?
No, not yet. And we might not have them because we've got sort of a more professional interim business, and they have so far been relatively unaffected. There's been some impact, and there's obviously been contracts coming to an end, but we haven't had any requests like that, and we might not get any like that because we're just not operating at that end of the market, I'm afraid.
Okay. Well, I mean, good for you, frankly, with regard to that. All right, let me go to another question. And a number of these questions at the minute, obviously, I'm directing at Tania. I'm hoping that Steve will come on the line at some stage soon. He has been called away.
Steve has just joined now. Steve, can you hear us? No, we seem to still be experiencing issues. I think we should continue, and I'll speak with Steve to try and make sure he goes on the call.
Thank you, Paz. Sorry, everybody. Steve's trying really hard to get in on this, but there's some technical issues. So for anyone that missed the very beginning, we have a fantastic panel, and that consists of Tania Bowers, you'll see legal counsel at APSCo, and obviously a lot of questions we're aiming at Tania with regard to furloughing and different things that we can do. We have James Wakefield, CEO of Cobalt Recruitment, that are big players in the real estate and the top end of that construction or build marketplace. And a global business. So I will actually put forward to James some questions about what's happening in other countries that Cobalt are in to give us some clues. And we're trying to very hard actually to get Steve Solomon, Director of Professional Services at NatWest, in on this call. I haven't had a chance to promise him he's not going to be stoned because NatWest seem to be one of the good players here and have really provided some pretty useful information, and I'm sure a lot of money to companies out there, particularly in the recruitment market. But meanwhile, I'm going through questions that are coming through. You can imagine why I might save the banking oriented questions and the business interruption loan scheme questions for when we have Steve on the line. So do bear with us on that. Okay, let me ask you the next question. The government says workers continue to accrue PTO whilst on furlough. Can this be claimed from the government as part of the furlough scheme? For an example, if we pay the worker £10 an hour and they accrue £2 PTO per hour, can we claim £12 an hour from the government, given that they have technically earned this during the time, or should we be stripping holiday pay out of their new pay rate? Tania, over to you.
Thanks, Anne. Yes, we've had this question quite a lot on the help desk, and I'm afraid we've got an opinion, but we'll see in due course if there's any more guidance. But however, so PTO, I'm assuming that means holiday pay.
Yep.
Right, I'm just getting the question. Because if you roll up, we've dealt with this in our new FAQs on holiday pay, which is on the Coronavirus Hub on the website. Recruiters tend to pay agency workers at rolled up holiday pay, and this is separately identified on their pay slips, or the agency worker chooses to be paid holiday when they take the leave as a normal employee would be. I think the basic point is the salary on which the government will reimburse the furlough does not include holiday pay. So given that holiday pay is separately identified as a different line item on pay slips, then I don't think you can just wrap up that salary and holiday pay into one furlough claim, meaning that if you will, and I think this would become a particular issue if you were audited by HMRC. So no, my view, I think the general view is that you need to finance the holiday pay. Also, there's a separate question of holiday pay and holiday leave. What you don't want to have is somebody at the end of a contract saying that you owe them lots of holiday leave and potentially another argument about pay. So I do think there is a potential argument that if you do have agency workers on furlough, then that is a group of people that it might be sensible to ensure they take annual leave whilst on furlough. This is all quite technical, and I have to say this is our opinion based on our understanding of employment law and speaking and listening to other lawyers. There isn't specific guidance on this issued by government.
Okay, thank you for your opinion on that, Tania. Next question, can you please comment on liability for furlough and statutory sick pay for direct engagement contracts? Tania, again, sorry, Mitty, it's coming to you.
Direct engagement contracts. Not quite sure what they mean by that. I'm going to assume they mean some form of fixed term direct contract. Once you're, I would need to double check this. I think if you're on statutory sick, you can't go on to furlough. Once you come off of statutory sick, you can be put on furlough. Once you're on furlough, I don't think we would expect people to put in SSP claims, because effectively that's going to be a reduction in furlough pay. So realistically, SSP might become a bit of a moot point when you're on furlough.
Yeah, I mean, you cannot have both, is the clarity. So you either pick your 80% or whatever of furlough salary, or £94 a week, whichever is bigger, I'm assuming.
Well, I will come back if I get further clarity on that, and that could be circulated afterwards. But yeah, I think the general view is that you wouldn't claim SSP when you are on furlough.
Okay, here's another furlough question. I'm doing these kind of, up front, as it were, until we get Steve on the line. If an employee is on furlough, can they get another job which is outside their contracted working hours with us?
Again, this is a question that there's not sufficient clarity from government. Some people say you just can't work for anybody else when you're on furlough. However, most of the legal precedents that I see do sort of give an option to work for others whilst on furlough if permission of the employer is given and if it's not in breach of their contract of employment. If you are furloughing agency workers, then I think there is a greater risk of them being furloughed by you and working for somebody else. And you do need to be worried about the potential fraud issue there if they're effectively going back to work for the same client. But again, we've raised this with EAS and BAYS that there's not that much clarity on whether you can work for other third parties when you're on furlough.
I think, Anne, if I can just jump in.
Yeah, I was going to ask you actually, Jibs.
I think from a practical perspective, and obviously the legal clarity on all of these different things that are being implemented is only coming out on a day-to-day basis. But from in terms of the spirit of the arrangement, the job retention scheme and the furlough, I think that's probably outside of the spirit of that, and we wouldn't be willing to take that position ourselves, and we wouldn't advise anybody else to do it either. The people can claim furlough or claim the retention allowance from multiple employers if they already have multiple employers. But in the instance where somebody has one employer, then no, they're either furloughed or they're not.
Okay, James, can I ask you, within the business, within Cobalt Recruitment, are you looking at furloughing? Have you furloughed any staff as yet?
Yeah, we've already done it. And I think it's probably fair to say that the majority of our competitors have either started to do it or are about to do it as well. I've spoken to CEOs, MDs, owners across the market, and the majority have either done it or are planning to do it imminently.
Hi, can you hear me?
Steve, I think
Steve, hello.
You are now in.
Hi, apologies, Anne. I have been here since 10:30 actually, but I was unaware that you couldn't hear me.
Oh, sorry, matey. All right, welcome in. We've been covering a lot of furloughing questions, but I'm sure at some stage very soon we'll get on to some banking ones. So bear with us. I'm going to come back to James, but Steve, if I've got a question, I'll give you a mention and come to you. Thank you. Welcome in. James, sorry. Yeah, obviously a lot of APSCo members in the market are furloughing. How have you found that your staff are being furloughed?
I think it's all in the communication and the way that you do it. We found that our staff have taken it very well. We've made it very clear that we're using this to protect both their jobs and also the company's reserves at a time when effectively certain desks are just not viable. And yet, across the business, there is still plenty of recruitment activity. So we're using it selectively to protect jobs, and the government's been very clear on why it's put it in. It's put it in to prevent people necessarily being made redundant. So we've explained that it's all about protecting roles. We've explained it's about protecting the company's reserves to see us through this situation. And I'd say 99% of people have taken it incredibly well. And that again is in the art of communication. I have heard of incidences in other businesses where perhaps things moved very quickly and the communication wasn't clear, and there was a certain amount of resentment or confusion. But I think again, as with any of these things, it's the art is in the communication and just how transparent and clear you are with people.
I do think that's right. Can you confirm to me, because we get asked a lot of questions about this, but can you confirm to me that Cobalt does not expect and frankly would not allow any work to be done on behalf of the business while somebody is furloughed?
No, none whatsoever. We've encouraged them to volunteer for the various schemes that the government's asked people to volunteer for. We've agreed that we will keep in touch with these people from a welfare perspective only. So a call at the end of the week from managers just to check in and make sure people are okay. But we're not asking them to do anything. We've cut off all their system access. We've suspended their LinkedIn accounts or Zing accounts or whatever that they have, and we've instructed them very clearly that they are to do no work, and everything that they were doing is being handed over to others.
Okay, great. There seems to be, as I said, the question gets asked very regularly, if I furlough staff, can they do a bit of work? No, they cannot. Please don't ask the question again, and do not allow that to happen for two reasons. The most dangerous ones is that it will get looked at the end of play and you may lose that 80% support. The job retention scheme money may get lost to you. But the other thing is the government have really made big steps, and it's not a government I elected, I might say, but they've made really huge steps to try and support businesses, but also try and support individuals so that they are not being made redundant or cut out. But we can't have it every which way. I think ethically it is our responsibility to play by the rules which have been set up to help us in this. Steve, I'm going to come to you. What we did do at the beginning of this is get Tania to give us an overview of the changes. I mean, it's pretty timely, this question time live, but the changes that were suggested by the Chancellor only at 10:30 last night. We know the guidance hasn't come out yet. We're hoping something may come out today. We know that Rishi Sunak is speaking at 5 o'clock thereabouts this afternoon, but I do have some questions, as you can imagine. I'm going to put my first question to you, and that is, and it's from me, do you think the banks have had a bad rap? They're copping a lot of blame for people feeling they're needing to sell their kidneys or donate their kidneys to the banks to get any money at all. Is this the problem of the banks, or is it the problem that the original guidance was not clear enough to the banks to loosen their belts a bit?
Yeah, good morning, Anne, and good morning, everyone. Firstly, I have been on the call since 10:30, so I have been able to hear everything that's been said, even though you couldn't hear me. So I'm delighted to be here. In terms of the scheme that's been set up by the Chancellor, this has been put together since the 17th of March, which is less than 3 weeks. And I think what was originally intended was meant to make a simple, straightforward process, has got lost some way with some of the technical aspects of the facilities that were first laid out. And the criteria that the banks all had to follow had to identify viable businesses that could access normal commercial bank funding first and foremost. And only if those businesses couldn't access that funding were the banks then allowed to use the CBILS facility. And I think that's the issue that's caused the tension amongst business owners and the frustrations between government and the banks. So I think that announcement by the Chancellor last night and the changes that are being proposed, which come into effect on the 6th of April, but actually are backdated to the 23rd of March, will allow a lot more businesses to access the CBILS facility. And I think more importantly as well, for some of the larger businesses that turn over £45 million, they can now access loan facilities up to £25 million under the scheme to help their business not just be viable in the short term, but also in the medium and long term as well. So I think the changes will continue to happen. I think it's really, really important that all business owners look at the criteria that's available on the British Business Bank website and that is being updated on a regular basis. And I think the changes being announced now will be very welcomed by the banks, by the Chancellor, and also by small businesses who need desperate access to this funding. And the banks are all working very, very hard to try and deliver that solution to customers as quickly as they can. But this will help speed up the process.
Okay, thank you for that. Then let me pick up some of the questions that have come through or are coming through now with regard to, and some of them may be, may not be able to be answered until we get more detailed guidance. But we've got some questions on this. Let's give it a go, Steve, if I pass some your way. In this week's announcement, 10:30 last night, what has the Chancellor actually factually done to help us get the business interruption loans from the banks? What do you think has made the real difference to give access to people, to allow you to open up and allow them to get money quickly?
So the single biggest difference has been the direct access to the CBILS scheme, which was previously the secondary point that the banks would go to. The banks had to provide overdrafts, loans, invoice finance facilities as the primary facility for businesses when they approached us. And we were working very hard to deliver those solutions for customers, but they weren't as attractive as the CBILS scheme because they came with interest costs, arrangement fees, and in some cases, some banks were proposing to take guarantees. I'm pleased to say NatWest has been very clear from the outset that we weren't looking for guarantees, and all the other banks have now come into line. The major change that's happened now, and it's about to be announced obviously later by the Chancellor, is that immediate access to the CBILS facility will allow businesses to have a capital and interest repayment holiday on the amount they borrow for the first 12 months. And then they will have the obviously have to make loan repayments on that facility up to the next 5 years thereafter. So it saves businesses cost, gives them quicker access, and it will make a tremendous difference. And the banks have been in detailed discussions with the Treasury over the last couple of weeks to try and make this process simpler. And I think we're finally getting to a scheme now which will support a lot more businesses as it was originally intended to do so. So I'm really, really pleased. And actually, I think the trade bodies, APSCo in particular, by the discussions you've had with government and the challenges you've made to government on behalf of your recruitment businesses have made a big difference, because government has listened to the lobbying and actually changed policy on the back of that. So I think the banks, the trade bodies, the government have all listened, and we're trying to now put a solution out there that helps save lots and lots of businesses and can allow them to prosper once again in the future.
Yeah, thank you, Steve. I have to say that the slightly pithy letter I sent to the business banking scenario about this problem of people having access to money, the demands I made in that all seem to be answered by the Chancellor's announcement last night, and so we're feeling a tad smug. We're not over it. Things aren't 100% perfect. They never are, and we'll look at that guidance to see what's going on. But I would also say, Steve, that the information that we got from the banks in order to put on the APSCo coronavirus resource hub, we chose the NatWest information that you gave us because it was very clear and very detailed and showed something that we were impressed by. So thank you for that. Let me come to the next question, which is one that might be music to your ear, actually, Steve, because it says, a member has said, if your bank is not one of those operating the business interruption loan scheme, what is the best way to engage with another bank? So this sounds like a business opportunity scenario here, Steve. What is the way that people can engage with a new bank that isn't the bank that they bank with currently, with a view to open a new relationship and capitalise on that fairly quickly?
So I think talking to people is probably the key element here. I would encourage those businesses, whichever bank they want to talk to, if they've got a recommendation from a colleague, a fellow business owner about how good their bank is, actually have direct access to that relationship manager. All the banks are willing to talk. There are some banks that obviously don't have access to the CBILS scheme, and all the banks can provide finance under the CBILS scheme to non-banker customers, and there's not a requirement for you to actually open a banking relationship. You'll have to provide some identification and onboarding, and obviously prove that your business meets the criteria. But all the banks will be open to that. But direct access, talk to the bank managers. They're all there willing to help. Discuss the options. They will then send you the APSCo and information that you need to complete. They then review that information and probably have a further phone call with you to go through any information that they need clarification on, and then they'll proceed to get an approval through their credit functions. But the main thing to understand, I think, for all businesses on this is that the viability question is the key element. So if you want to borrow money, this is a loan that will have to be repaid back at some stage. If your business has not been profitable in the last couple of years, we need to understand the reasons why that's been the case. And it might be one-off investment costs, expansion in your business, opening overseas offices, etc. But you need to probably provide a lot more information around why you've not made any money, because if the banks cannot evidence you can pay this loan back in the future, it makes it very, very hard for them to access the CBILS scheme. So there's always a story, and you need to provide a compelling story to the banks so they can understand that, so that their teams can then help you process these applications and secure the funding that you quickly need. But my team, we're talking to lots of non-bank customers at the moment, and I'm saying to them, look, talk to your own bank, talk to us. You can have an offer from two banks on the table. It's entirely up to you as a business which one you proceed with, but putting all your eggs in one basket sometimes doesn't always work. So I would encourage any business owner to look all the banking relationships they've got. If they're not getting support from their existing bank for whatever reason, pick up the phone.
Thank you. There's a bit of a plug for you here, really, that I'm going to say, because you couldn't possibly say, but I know Steve has a team of 80 people specifically in that professional services market and the commercial market that would probably quite love to have those discussions with people. And so, yeah, I mean, have a look. This is the time to really broaden what's going on there. We've had a couple more questions with regard to furloughing and rolled up holiday. We have covered that already in the session, so it may be, it might just, if it's okay, Tania, to give me a one-liner on rolled up holiday pay to make sure they don't create a liability at the end of all of this. Can you just repeat briefly how it should work with regard to rolled up holiday pay? Just for anybody that came in a little bit later, we covered a lot of those questions earlier on. Tania? Hello, Tania, I feel I've lost you.
Sorry, apologies, technical issues via the mute button there. Rolled up holiday pay should not be included in the basic salary calculation that you use to calculate the 80% on, meaning in effect that will need to be funded by the recruiter. We also recommend that you do organise for agency workers on furlough to take any annual leave that they effectively accrue through the rolled up holiday pay during the furlough period. Health warning here, this is our analysis of the law. This isn't coming from government guidance, but it is consistent with stuff I'm reading elsewhere online and conversations I'm having.
Okay, thank you for that. There's a question that I think is a great idea, actually. Will there be a calculator to help work out wages for the job retention scheme? Now, I'm expecting that this question is, will government provide that? I suspect they're a tad busy. If it's whether APSCo will provide that, do you know something? I think we should and we can. So my view is, yes, we will do it. Am I dropping us in a hole there, Tania, by saying yes, we will do it?
I don't think a calculator is really necessary. It's just if they're on variable pay, it's just creating an average. It's just calculating an average of the pay over the previous year. I don't think it needs a calculator.
Okay, all right. If some people need it, we'll produce it. If you don't need it, that's fine. Another question. I'm not sure I understand this. Could you advise if we still need to implement KID from the 6th of April?
So this is a reference to the key information document that's an amendment to the conduct regulations that's coming into force on the 6th of April. Yes, that's going ahead. Employment businesses, when they register new candidates, when they sign them on as of 6th of April, will need to provide key information documents. However, we have put a letter up on the coronavirus hub that we have been sent by BAYS, which is directed at our members, which is seeking to reassure people that they will not be undertaking hard-hitting enforcement activity about this change anytime soon. And they also explain how they're modifying their enforcement activity more generally, as they do recognise the strain that recruitment businesses are under at the moment. However, in a nutshell, yes, the change is coming into force, and yes, kids will be required from 6th April.
Okay, James, can I come to you? We're looking, I suppose, because we've got Steve here, are you as a business looking to access funds from the bank to aid from a cash flow point of view? What have you done so far? I mean, have you done that so far and didn't have any kidneys to sell, or are you thinking of doing it now things are being opened up a bit more?
I think we're probably doing what most prudent businesses are doing, which is investigating what's possible and then on a case-by-case basis deciding whether to actually do it or not. The reality is that in the UK, the furlough scheme is a real game changer, or a real positive for us. And then in our other countries' operation, where there are direct subsidies and not loans, we're trying to take advantage of those options to protect the business first. So Kurzarbeit by Geld in Germany, for example, and a couple of other things available further south. But yes, we are looking at the financing available. I think so far we'd assessed what was being put on the table as being not particularly attractive, and therefore we wouldn't have gone for it had it not been absolutely necessary. But if the changes announced last night that are going to come through the pipeline over the course of the next few days make a difference, then yeah, we'll look at it. But we're not going to be accessing it immediately and immediately going out and spending it. It's more sort of a if we need it, then we want to give ourselves the ability to have it.
Yeah, fair enough. So if you could compare, say, your US operation in Germany with the support that the government are giving the markets out there, how would you compare the UK's response to this?
I think the UK and Germany are probably the most similar in that there is financing support being made available and being pushed by government through the banks in both countries, and also because of the furlough scheme in the UK and because of Kurzarbeit, which was created during the GFC in Germany, effectively a way of placing employees on a part-time basis, and the government pays an element of their salary. Quite similar to furlough, but just with a bit more flexibility built into it. The UK and Germany are in similar positions. I think everywhere else is probably a little bit further behind in terms of the real direct support that's being made available, but places are catching up. The US is probably the furthest behind, but then the US as a country is reacting the most quickly to a much more sudden escalation in the crisis, because it was probably not as aware that the crisis was happening until very recently. And we're just monitoring every country and doing exactly what we're doing in the UK, working out what's available and actually attractive and worth getting, and then taking advantage of those things that are available. And it's purely about making sure that we've got a long enough runway to come through this thing in a strong position.
Yeah, look, I'm sure in America, because pretty obviously, as they were told by their president, everyone was going to be in church in a crowd scene by Easter, that it's become a bit of a surprise to them that it's got a bit bigger than they originally thought. Thanks, James. Steve, I've got more questions for you, if this is okay. There's some questions with regard to what viability looks like, and are there set criteria that all the banks are going to use to see whether a business is viable I don't know what your experience is of that. Are the banks talking to each other about actually giving some kind of understanding of what viability looks like?
The banks are all engaged with the Treasury, looking at best ways that we can support businesses, and the viability question is one of the key fundamental ones that they're trying to work in tandem together on. So any business that wants to access the CBILS facility and borrow money, we need to be able to evidence to the Treasury that they can pay that back over a 6-year period. So the first 12 months capital interest free, but then repayments over a 5-year period. So if a business hasn't been making money, it's very hard for us just on the face of the financials to reach a positive conclusion. But there's always a story behind that. So it's really, really important for the finance directors and the owners to engage with the banks with their applications to talk through the historic performance and the reasons behind that. And also, more importantly, what the future performance will look like once this crisis is over. And if we can understand the cash flows of that business, and there's a good reasoned discussion around that, the banks will all try and look and support. But the challenge is every single recruitment business is different. Some don't need any support at the moment because they're well capitalized and sitting on lots of cash. Others have lost their revenue totally and require immediate access. So every single business is different, and you cannot put the same lens across every business. So it's an individual story that each owner has to tell the bank. You need to have a really good dialogue. And I think the most important thing we're seeing is that the depth of conversations we're having with customers is far greater than we've ever had. And we discuss through all the options around furloughing, VAT deferments, etc., and grants and other options, and what remedies are on the table to help the businesses through this next 3 to 6 month period. And where possible, we are trying to help and support. We are getting lots of applications from customers. We are starting to get some good amounts of money out to the door. And all I talk to my teams about every day is how many businesses have we helped today? Because that's the single most important factor at the moment. Whether we lend them £1,000, whether we lend them £1 million, it's the number of businesses we help. And I think all the banks are working like that. And I think, I'm not hearing any noise from the banks to say they're not doing that. I think at the outset, the change of criteria was difficult and different interpretations. But I think all the banks are now past that, and they all understand the commercial imperative of supporting our customers, because without our customers, we don't have a business. So it's really, really important. So Anna, I think to your point, the viability, there's a story to tell. So it's really important that the finance team and the MD talk to the bank.
Okay, so I am a viable business, for instance. What ducks do I need to get in a row when I make that call? What is that I can have prepared earlier to get ready, even if I'm not going to have a problem getting the money? What can I do to speed this process along, Steve?
It's a very straightforward process. So we need cash flow forecasts to show the impact this virus is going to have on the business, and potentially what the business is then going to look like when the recovery then starts happening. And we're not expecting any business to bounce back to 100% of trading activity as soon as the virus is over. So there'll be a gradual recovery of the business. So we're looking for businesses to forecast over the next 6 to 12 months where they think the business will be. We're looking for a reasoned argument around the amount they're looking to borrow and explaining why they need that amount of money. Straightforward application. There's a British Business Bank checklist they need to complete, and we then have access to their historic financials as well. But the main thing is to complete the application as fully as possible, because without that information, we just have to keep coming back to ask additional questions. But regular dialogue by phone, by email, we're finding it works really, really well. And once we've got that information, within 7 days, we can get the money out the door. So it's that's the important thing. This crisis has existed for 3 weeks. The banks are working flat out to get these through our credit process and get the documentation produced, and we've got plenty of people available to do that. So we're working at fast, at pace. The main thing is getting the understanding right. There's nothing worse than us putting a loan together for a customer that proves to be insufficient or doesn't meet the customer's requirements. So talk to us and engage with us.
Okay, I've got another question on this sort of subject, and it's an interesting one. One of our members has asked, what is an average? I'm assuming they mean average here. Actually, maybe they mean mode average. What is an average loan for an SME? And what would the average loan for a larger company? What do we think that's going to look like? And what will be the average length of a loan? Any ideas? Have you got a flavour? It's early days, but do you have a flavour of what the amounts are looking like at the moment and the length of repayment time? Steve.
So we're seeing a huge variety of requests, and again, it depends on how profitable the business has been historically, how much of those profits are retained. So we're seeing requests from £120,000 up to £5 million in the scheme, but each business is different. So you can't compare apples and apples here. It just doesn't work. But in terms of the terms, we're suggesting to customers they look to take the maximum term of the loan facility because they can pay the loan back early. So the first 12 months is capital interest free. They could pay it back after the first 12 months if they wish to do so. By keeping the loan repayments as low as possible, it allows them flexibility until the market conditions improve and pick back up. So smoothing their cash flow as much as possible, but they can always repay the money back whenever they want early. But again, we will have that dialogue and that discussion. Some businesses don't like to borrow and want to pay it back as soon as possible because they just need a short-term requirement. Others need longer-term support, and where appropriate, we'll put a longer-term facility in place. So, there's flexibility built into the scheme. I think that's the important aspect. And you should discuss with us what you want, and then we'll try and work the art of the possible.
Okay, thank you. I've got another question from someone who is feeling the pinch, let's say. We've been allowed to delay VAT payment until the end of the year. With a vastly reduced revenues and ongoing negative weekly cash flow situation, it's difficult to see how we will be able to pay this at the end of the year. Tania, do you think that HMRC will enforce insolvency, or might they look for a payment deal that goes on further, or write off any other debts? What's your view? You're having twice weekly meetings with HMRC. Do you get a flavour of how lenient they're going to be?
Hi. Our meetings are with BAYS, not HMRC. I'm not a tax lawyer. I genuinely don't have a view about this. I suspect that James, as making VAT payments and having an ongoing relationship with HMRC, might be able to give a view on their general flexibility. James, is there anything you could say?
All I know is that there is flexibility, and again, you need to speak to them directly to get it. I can't comment on Cobalt, but I know other businesses have gone and got the holidays that are being discussed. But again, it's about speaking direct to HMRC and finding out what's possible.
Yes,
I'm sure because I know the finance director of Cobalt, Stephen. I'm sure will get more flexibility than anybody would. From HMRC, but it's good to hear there is flexibility there. So what I would say to this person is not all is lost. Have the conversations to see what you can do about getting flexibility. Would that be right, Tania?
Yes, I mean, there is the time to pay. They are inviting businesses to talk to them on a one-to-one basis about taxes more generally, and time to pay. So that does sound like good advice, yes.
Okay, I'm going to sorry, James, very quickly, because we're going to come out to our last question.
Yeah, I was just going to very quickly add, there's things that businesses can do to improve their cash position, and there's things that take a long time and things that don't take very much time at all. So I think I'd just advise businesses that haven't done anything yet to look at those things that can be quickly accessed. And in the UK, that's furlough. Furlough is the most immediate way of altering your outgoings and being certain in this situation as it's possible to be of that.
Okay, thank you, Tania. I'm going to give you a question that I know you can give in a couple of word answer. When will IR35 be reintroduced for the private sector?
So it's been delayed for exactly 12 months. So 6th April 2021.
6th of April 2021 is the guidance that we've been given. There you go. Okay, one more question, and it's an interesting one, a slightly different one for each of our 3 panel members. So I've saved it to the end, but be aware we've only got 5 minutes before we close everything off. So I'll keep you relatively brief. The question is this: what type of recovery does the panel predict? Steve, I'm going to come to you. Do you have a view of what recovery is going to look like for the recruitment market? Steve?
I think it'll be slow and gradual. That's probably the easiest way to describe it. Business is going to take time to rebuild after this has happened. And so hiring will be slower in the permanent sector. I think temps will pick up a lot quicker, but slow and gradual, and it'll probably take us 12 to 18 months to get back to where we were.
Okay, thank you. James, what's your view? How are you planning for Cobalt to actually make a recovery and make the market, your market particularly, from a recovery point of view? What's your view and how are you planning for it?
We're planning for worst case. I think there'll be severe disruption to the extent that there is already now for at least 3 months. I think then there'll be extended and fairly severe disruption for 3 months after that. And then I think there will be a very slow recovery that will take at least 6 months longer than that. And I think that the normality we've returned to on the other side will be a different version of normality. So I think we're in this for the long haul, 3 and then 6 and then 12 months. But I do think that there will be a bounce, not just on the interim side, but in certain areas on the perm side, as things that were put on hold or put on ice have to be picked up quickly at the point when they can be picked up quickly and people can actually work. So I think there will be a bounce at about the 6 to 7 month point, but I don't think that will be enough of a bounce to get us back to normality. And I think we're a year to a year and a half from any version of normality.
And how do you think your business has set itself up to make sure it's ready for when the market comes back and the way it will come back?
Well, first and foremost, we're in a better position than a lot, and that's not a complacent or arrogant thing to say. We have better reserves, and we're not a business that's ever leveraged itself. So we're starting from a reasonable point. But regardless of that, we're taking more action more quickly now in order to be able to give ourselves the longest possible runway. And I think any business that's not doing that at the moment is really risking falling off a cliff in the short term. I also think that any business that's not planning for this to be a medium to long term disruption is probably going to need to revisit that over the next couple of weeks.
Yeah, thank you. Tania, what do you feel about recovery? Do you have any views?
In my experience from 2008, etc., I think need to recognise that there is going to be quite a long dip, and contract is always more reliable in these times, and so contract income. And then I guess just being nimble and looking for markets that didn't fall as far or are recovering quicker, in terms of where to focus your efforts once people are back in the office or, trying to do deals.
Okay, let me round this session to its close. I want to thank our panel members, Tania Bowers, James Wakefield and Steve Solomon, for what I think has been an amazingly good session. And what I would say is this: the market will come back. Whether it bounces is slightly different, but it will come back. Make sure that your business, whether you're a recruitment company, whether you're an umbrella business, whether you're a bank actually, or any supplier into this market, or indeed others, make sure that your business is proud of the way you've behaved during this crisis. Because let me tell you something, we're all making a name for ourselves based on how we behave during this time frame, how we behave to clients, how we behave to candidates, how we behave to members if you're a trade body, and indeed how you behave to your staff, as well as your family and community beyond that. Make sure that you are the person that you really want to be and the company that you want to be remembered as we come out of this crisis. You are creating a history for yourself. Thank you for being in on this. Our next question time live is on Tuesday. I know that we have James Soley from Rullian, the Chief Exec of Rullian, and some other good people on that session. Do join us again. Meanwhile, be safe and have a great weekend, even if it is at home, or potentially if you have a garden or balcony on the in the garden or on that balcony. Thank you again. Take care. Bye-bye. Thank you to our panel.